Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 18th of July 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. A relatively quiet day on the global foreign exchanges. I just want to flag a couple of key points though, all related to the dollar and weakness in Southeast Asia. First of all, the dollar pushing back against dollar yen, gaining a further 0.14% against the Japanese currency, and we'll look at perhaps reason behind some of those movements in the yen a little bit later in the video. We've also seen, however, the dollar making good gains once more against the Korean won. In this instance, the dollar adding 0.57% against the Korean currency overnight, and the dollar for its part, as expressed by dollar index trading, back above 95 once more. 95.09 dollar index trading should before we recorded the video, and that's up by around 0.15%. Can it maintain the move above 95? Well, that's the $64 million question, and one we'll have to pay close attention to in the balance of the week. Right then, what's on the calendar? Events that may move the markets today. A compact calendar, still with plenty of information and detail for us to pay attention to. However, there's an ongoing meeting of European finance ministers today to be aware of first of all. And then at 8:30 GMT, we'll have retail price index and consumer price index data out of the UK for the month of June. Obviously, the Bank of England has an eye on inflation as one of the guides as to whether it needs to raise interest rates in the UK or not. August is penciled in as a likely date for a rate rise by many in the market. At 9 o'clock GMT, the attention will switch to Europe and CPI data coming out of the wider Eurozone. In Europe, the ECB has effectively abandoned inflation targeting with its decision to remove QE from the end of 2018. Nonetheless, the inflation data can say something about growth and the health of the consumer. Then we fast forward to 12:30 and switch over the Atlantic to the US for housing starts and building permits for the month of June. And then at 1400, the Fed Chair Jerome Powell begins his second day of testimony to the US lawmakers on Capitol Hill. At 1800, we have the sometimes influential Fed Beige Book report, and then fast forward again to 2350 GMT tonight for balance of trade data out of Japan for the month of June. Right then, breaking news and comment that's caught my eye overnight. And first of all, dollar yen has fallen below 113 for the first time in 6 months, and the yen weakness may be as a result of Japanese pension funds selling the domestic currency to buy foreign equities. Now, that's not the definitive answer, and I think people are still scratching their heads really as to exactly what's happening, but certainly this has played a part in the past in weakening the yen, and the feeling is that Japanese pension fund giants may be back in the equity markets, or foreign equity markets, having been absent for some time. Meanwhile, Australia's leading economic index was flat in June compared to a modest 0.2% fall in May. However, the 6-month average growth rate of the forward-looking indicator fell by 0.33%. Now, leading indicators obviously try to predict the path or future path of the economy, so the Reserve Bank of Australia would have been hoping to see a pick-up in these numbers, and it hasn't had that. So another dent, shall we say, in the chances of a rate rise in Australia. Meanwhile, inflation in Argentina has risen by 3.7% in June, up from 2.1% seen in May. Now, that might not sound too bad until you realise that these are month-on-month numbers, and that annualised inflation in the country is running currently at 26.4%, with transport and food costs rising sharply, and in each case by more than 5%. So despite the IMF bailout, things remain very difficult in Argentina and potentially will only get worse. Okay then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? Fund managers have turned bearish on global profitability, Bank of America Merrill Lynch survey data reveals. Fund managers' expectations about profits have slumped since January, and 60% of managers surveyed flagged a trade war as the biggest risk to markets. They also noted that equity allocations are at their lowest for 2 years. The chart opposite shows us the sentiment around profits among global fund managers since 1997, and as you can see, it has been trending lower. Not surprisingly, perhaps as we enter the later stages of the economic cycle, but more recently the data has dipped below the gain line, and now people are in bearish mode. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. Thank you for your time.